Dirty dealings, corporate battles, consumer woes. This is Evening 5. Capital A said it no longer needs to carve out its branding business to achieve the positive equity position necessary to exit the Practice Note 17 status. Instead, the proposed sale of its aviation business to AirAsia X will be sufficient, Capital A's Chief Executive Officer Tan Sri Tony Fernandes told The Edge in an interview. He said that the priority right now is to fix the airline business. Capital A's passenger traffic has remained below pre-pandemic levels even as average fares rebounded, and the company still had 23 planes in maintenance out of a fleet of nearly 200 aircraft at end June. The company is aiming for a 90% load factor and expects fares to remain higher than pre-COVID-19 levels. Capital A mainly runs the short-haul airline business and also houses subsidiaries such as Logistics and eWallet, while AAX mainly operates the medium to long routes. Both will hold their AGMs in mid-October to obtain approval for the sale of two AirAsia airline companies. Back in February, Capital A had announced plans to carve out its branding business that charges fees for those who use the AirAsia brand for $1.15 billion to a U.S. special purpose acquisition company as part of a U.S. listing exercise in a bid to address the PN17 status it has been in since January 2022. Meanwhile, AirAsia expects any impact on the company from the ongoing global aviation industry's supply chain bottleneck to be sorted out by end 2024. Fernandes said that while AirAsia also faced supply chain issues, it was mitigated by its conservative approach to spare parts management, which saw it keeping lots of spare engines. AirAsia is also supported by its Aviation Academy that provides ready manpower, as well as the use of tested and proven engine models and a pipeline of new aircraft orders. The number of operational flights under AirAsia are expected to rise to 190 by end 2024, while AAX expects 28 planes to be operational by the end of this year. Maxis will likely lead the second 5G network when the government announces who will win the right to develop the second network, CIMB Securities said on Wednesday. Regulators may want government-linked CelcomDigi to lead the first network under Digital Nasional, the research house said in a note. CIMB added that a partnership between CelcomDigi and YTL Communications may be a good counterweight to Maxis and U-Mobile. The impending announcement by the Malaysian Communications and Multimedia Commission is expected to clear up uncertainty in the telecommunications sector that has dragged on investor sentiment. CIMB believes that CelcomDigi, Maxis and U-Mobile are the final contenders. MCMC is expected to announce only one winner, though CIMB expects the winning telco to enter into equity partnership or long-term lessor-lessee arrangement with other telcos. CIMB warned that there may be a knee-jerk reaction following MCMC's announcement, but recommended that investors take the opportunity to accumulate shares of the losing telcos that may decline sharply. Oil and gas services firm Keyfield International has secured 8 work orders worth about $130.3 million from Petronas Carigali. These work orders are for the provision of 6 units of accommodation workboat vessels and 2 anchor handling tug and supply vessels for Petronas Carigali's offshore activities, which will be carried out in the second half of this year. The work orders were issued between June and August this year to its wholly owned unit, Keyfield Offshore, and are based on a panel contractor contract for offshore support vessel services for petroleum arrangement contractors that was signed between KOSB and Petronas in April 2024. Subject to Petronas Carigali's rights under the contract, Keyfield says the 8 work orders issued will be for a duration of between 91 and 153 days from the commencement date of on-hire certificate. Listed on the main market just 6 months ago in April, Keyfield's share price has gained 156% from its initial public offering price of 90 cents. Shares of Keyfield fell 1.3% to close at $2.30. LB Aluminium reported that its net profit for the first quarter of FY 2025 doubled from a year ago as revenue hit its highest in 2 decades, underpinned by stronger contributions from both its aluminium and property businesses. The group made a net profit of $8.86 million, up from $4.32 million previously, while revenue jumped 36% year-on-year to 279.8 million ringgit. No dividend was declared for the quarter under review. Going ahead, the company expects the strengthening of the ringgit against the greenback will lower input costs for aluminium billets, which are purchased mainly in US dollars, though it noted that sales revenue may be impacted as its sales are primarily priced in the same currency. Additionally, global aluminium prices remain volatile due to uncertainties in trade policy. On the property front, CIMB Aluminium anticipates that both Satu Anggota Satu Rumah project and the PSV1 residences at Platinum South Valley in Bandar Tasik Selatan, Kuala Lumpur will continue to contribute positively as sales and construction progress increase. For the forthcoming quarter, it is cautiously optimistic about achieving profitability. KJTS Group's unit has signed a 20-year agreement for retrofit work, operation and maintenance services for a chiller plant and the supply of chilled water at the Sentara Grand Mirage Beach Resort, Pattaya, Thailand. The subsidiary in Thailand, KJTN Engineering Co., entered into the agreement on Tuesday with Central Plaza Hotel Public Company. This marks KJTN's second project with Central Group. KJTN will finance the retrofit works, estimated to cost 38.98 million Thai baht. The retrofit works are expected to commence on October 1st and be completed by May 31st next year. Meanwhile, Centel will pay KJTN a fixed monthly fee of 620,072 Thai baht during the operation and maintenance services period. In addition to the fixed fee, Centel will also pay a variable fee based on the amount of chilled water supplied. Over the 20-year period, the total fixed fee will amount to 148.82 million Thai baht. The O&M services as well as the chilled water supply will commence on June 1st, 2025 and conclude on May 31st, 2045. Centel, primarily involved in the hotel and resort sector, is part of Central Group, one of Thailand's largest private commercial conglomerates with over 50 subsidiaries, with diverse investments across various industries. KJTS specializes in providing cooling energy, cleaning and facility management services, primarily for the property industry. On Monday, the group announced that it had secured 24 million ringgit contract for works on a data center project. The counter has surged some 143% against its initial public offering price of 27 cents since its listing in January on the ACE market, partly benefiting from investors' frenzy over data centers. It ended today 1.5% up at 67 cents.